No, this is the classroom. The podcast, guys, by the way, will be in the webinar room. Those who are joining the classroom for the podcast, I just want you to know that it will be in the webinar room. Green in live and simulator. Awesome. I have done my 5 trades for today. I had around 3 losers and 2 winners, but I'm green for the day, which is good. Sticking to 5 trades for now. It's okay. You can send it again in the off topic. I'm going to delete it from here. And let's start. I will review some of your trades. I'll review my trades. We might finish a little bit earlier. It's just because the podcast will be in the webinar room and most of the members will be right there. Or I'll be able to answer some questions you have if you have any specific questions in addition to the trade review. Hey, Darda. So this Gigi, I like this thing. I mean, I was watching it, but I don't know how I actually missed this. The daily is not visible here. Let me open my DAS and I'll show you how Tesla looks here on the daily, because the daily was amazing on this thing. So look at the daily. You're having range. We're breaking down, and then we're gapping back up. And we know the hype on Tesla, it's been strong, I don't know, for like forever right now, right? And if I see that this thing is offering long setup, I'm definitely going to be long buys on it. And I really liked how the pre-market was not really extended or anything. It was going sideways, slowly going up before the market opened. So you're looking at the daily chart and looking at the pre-market price action. I was long buys in it, and I had it on my watch list. Gigi tried it at the open. I bet you tried it for 1 minute average breakout. Oh, you missed the 1 minute average breakout. Okay. If I was watching it, I would have taken it to the long side right here for 1 minute open range breakout, which unfortunately wouldn't have worked out. I see you took it to the long side, got stopped out, which is totally fine. That happens. Re-entered really nicely. Good partials, multiple ads with partials. So yeah, this was an amazing trade. 7.8 hours. That's amazing. Look at this, how he managed his risk to reward. 0.5 loser, 7.8 up, and basically he's done for the day with 7.3. Was this your only trade for today, Gigi? Yeah, this is awesome. Really good job. I like it. 2 trades and done. That's awesome. Hey, Andre. Okay, I lost my mouse. R2, let's see what you did. Testing out ABCD. So you haven't been trading them for a while? Let's take a look at these things. First, you took it for a 5 minute open range breakout. Was it a short, right? And did you exit the break even, or this was long after? I see the short. Did you flip after there? Okay, I personally wouldn't have flipped right here because overall NKLA was short. I know this is an ABCD pattern, but remember, on an ABCD pattern, you want to see the overall direction of the trend. If it's mostly below, you want to take it for reverse ABCD patterns to the short side. If it's up there, you want to take it to the long side. Basically, an ABCD pattern is a trend continuation, right? I see. You consider this the cup and this the handle. So okay, even if you're trading like any setup, a cup and handle, ABCD pattern, double top, double bottoms, like literally any pattern, you need to have the bigger time frames supporting your direction. Remember that we don't trade a cup and handle on the 1 or on the 5 only because it looks like a cup and handle, and we don't trade head and shoulders only because it's forming a head and shoulders. And same things about double tops, double bottoms, ascending triangles, descending triangles. Bull flags, bear flags, we just don't trade the step only because it's right there. Let's take a look at NKLA on other time frames and see if there was anything supporting us. NKLA. So the 60-minute chart, it formed a new 60-minute high around here, which is decent. Why is that? Because we are having a tweezer bottom or something like that at the low of the day, or a red candle followed by a green candle, sort of a reverse head and shoulders pattern on the 6-minute chart. The daily chart is not weak. Yesterday we had a hammer right there. Today we sold off and we bounced from the low and we're coming back up. So yeah, overall the pattern was there on the bigger time frames, and you took it for an ABCD pattern for a continuation. Because look at this sell-off here on the 5-minute chart. Yes, it shows us that the stock is actually weak, but if you take a look at the daily chart, you could see that overall it was strong, and for around 4 days it's been hanging around the 9 moving average on the daily chart. So looking at the daily, I would have been a little bit more long buys than short buys, and I definitely wouldn't have shorted this thing unless I caught it at the break of this range right there. So yeah, that was a really good one. Again, I lost that chart. Yeah, that was a really good one. Good job. So yeah, you don't trade it only because you see it like this, right? You combine it with all the other charts you're having, and if it's looking good on them, then take it. But only because it's giving you the cup and handles on the 5-minute chart, it wouldn't be working like every time. But yeah, good job, nice trade, and it seems that it either worked or it's still working in your favor. Yeah, I see this. Do you have any specific question about this one, Nivinir? Remember that these guys, when we see a stock making this type of move in the pre-market, we just simply don't trade it after market open. Oh, you took it right here. I see that. I see that. So yeah, guys, just remember this. If stock does these kind of moves in the pre-market, and we've been seeing those a lot recently. Before, they were happening rarely, not every single day. And even before, I realized that if it does a move like this, usually it just drops down. And recently, we've seen a lot of those. They make a huge move, and then they form an ABCD pattern. And just think of it from your psychological way. If a stock is that strong, it's just impossible to have it selling off. It will definitely give us a second leg up, because this was the first leg up. A lot of people missed it, and they'll be getting on the first opportunity. I mean, this is what we are thinking about, right? And eventually, it just doesn't work. This happens a lot. Yeah, exactly, Nivinir. In the pre-market, limit orders are only getting executed. Your market order will be slipped through. But even if you take it around here after the hammer, it will just fail. If I see a stock like this in the pre-market and I eventually convince myself to trade it, I'll not be trading it to the long side. I'll be actually trading it to the short side. Marvin, see what you did there. You're welcome. So what did you do here? Oh, BCRX, you took it to the long side. So look, I'll show you my BCRX trade as well. And personally, I wouldn't have taken it for an extreme reversal on this thing. And even if I take it to the long side here for an extreme reversal, I would have bailed somewhere around here. What's the reason for that? The reason for that is the stock just dropped a lot in the daily chart. That's weak, and it formed a new daily low, right? On the 5-minute chart, we had the first leg down, and we know that the second leg down could happen. Usually the third leg, which is here, is the reversal leg. If you remember the ABCD pattern webinar, first leg down happens, second leg down could happen, but the third is usually the reversal, and we don't take the third reverse ABCD pattern. Now, looking at this, we're still far from the 9 and the 5. I know that we could get closer to the 9 and the 5. If you're taking it to the long around here, with a stop down here, and I see that your stop loss was way down here, and the target the 9 and the 5, then the risk to reward initially wasn't good, because we know that the 9 moving average is just simply an average, and the stock is not necessarily reaching it out. And with each next 5-minute candle, the 9 gets closer and closer and closer, and then just the risk to reward gets messed up. So with an entry around here and a stop loss around here, I personally would have avoided it. Yes, you have the entry, good candle. You're having the stop loss, and it is a good stop, but your reward is not realistic. It's not giving you the 2-to-1. You need to have stop loss, entry, target. One of those is not good, just avoid the trade. If you got in a little bit earlier, then that would have been like a decent trade. Now you're having the reverse ABCD pattern, just bail on it a little bit earlier. I could explain my entry if you want. Let me actually explain it quickly on BCRX. BCRX. So why did I take this thing around here to the long side, and why exactly around here? Why didn't I take it on this hammer, or maybe I don't know, earlier? Cool. First of all, look at the daily chart. The daily chart, we dropped off and we sold off all the way to this level. Look at this 971 resistance from 21st of or 22nd of January. There it is. Not 971, it's 978 here. 978. We're going into a daily level. The next thing we had is an increasing volume. We started having increasing volume starting from here, right? A little bit there, but anyway, the biggest increasing candle was around here. The third reason I had is I usually wait for the third candle for a climactic, for a parabolic reversal, because usually after the third candle, we're having the reversal candle. This is the first, and this first is combined with the second. Basically, they're on the same range. So this is the first candle, and I consider this right here the first candle as well. They're basically at the same range. This is the second, and this is the third. So I really wanted to see the third candle forming before expecting a pullback. And finally, and that was actually my most important reason, at $10, there was a huge wall. I don't really remember right now how many shares we had right there, but it was somewhere around 40,000 on average, if I'm not wrong. I saw it hitting the $10, and usually if you are having a big wall on the bid on the ask, and you could actually start paying attention to that, if you see that there is a huge wall, and if it's breaking out of this wall, it will usually get a spike after breaking the wall, and it's not because people are getting in after breaking the $10. It's because the bid is looking like this. You'll have 40,000 shares, and then you'll have those normal 200, 100, I don't know, 200, 300, something like this. And when a lot of shares are getting down, like let's say, for example, 42,000 at even, not only 40,000, these 2,000 will grab some of those shares down here, and it will cause it to spike back down. If it's not continuing to drop lower, it means that this spike right here was caused by those orders being triggered, and it's not by people going short on it. Because if people are going short on it, it will just continue bleeding down way more than that. If after breaking the wall, it just immediately starts coming back down, I just assume that, okay, those shares right here were grabbed because of this getting broken with a little bit of extra share size. And combined with all my rules for the parabolic reversal, I'm taking it to the long side, and I just have that stop because usually it just doesn't look back up. Actually, I didn't have really tight. I had it somewhere around here. Partial all the way up. Now look at this. Why did I add around here? If you take a look at the 5-minute chart around here, I was interested in an ad starting from here. But I told myself we might make a double top with the second top lower than the first one and sell down. So I waited for a new 5-minute high. I told myself, if we go above this area around here on this candle, I'm going to add and continue going higher. Now, thanks, Nivir. Now look at this. And now I'm looking at this candle. Okay, if this candle breaks the new 5-minute high, we are most likely going to go a little bit back up. So if you're making a new high, most probably it will go at least a little bit in your favor. This candle didn't do that. It didn't break the previous candle. Now I'm marking the next candle, and you see how I was moving this line around here with each candle to the downside. It was here at the beginning just for me to know the exact entry price. Then I'm moving it around here. Then this candle, I'm moving it around here. And finally, we're making a new 5-minute high. And I know that if we're going to make a new 5-minute high, at least for a little bit, we are going to run in my direction. We're breaking it by 1 cent, and I immediately take it to the long side, and I put my stop loss somewhere in the middle of this last range on the 1-minute chart. Partial at the break because I know we're still weak and it could go to the 9 and reverse against me. So I needed to lock in some profits. Now forming a reverse ABCD pattern. This is my type 1 ABCD pattern. And I know that after this, it could drop. I don't even wait for it to break this support down here. I just exit in the middle of the range according to my rules. If there is a range and you're getting in at the break of the range, your stop loss is the middle of the range. Marcos, it wasn't so many. I get in around 2 hours on it, or 2.5 only. somewhere around that. I think it's 2 after commissions. I could have got way more, but my first partial was early. I think my stop loss was at the low when I double clicked. So if I'm getting my entry at 94 and I'm having my stop loss, let's see, 95, 10, 15. Yeah, I think my first partial was really early. It was 1.5 or something around here, and then the rest. So this partial was really bad. I decided to partial closer to the 1 minute candle high, because sometimes we just don't make a new high, and drop back down. And my entry wasn't like fully ready. It wasn't like exactly after a hammer. I was not sure if we were going to make a new high. So this partial ruined the risk to reward for me. And after this partial around here, I still had around 30 or 40% left, where I exited at closer to break even after my final ad. I really expected to get closer more to the 9, which didn't happen. Wasn't a killer trade. But there was another good trade I'm going to show you. So Nina traded BB for a breakout. Let's take a look at BB on the bigger time frames first. Look at these guys. This is awesome. You see that the daily chart, every day we're going down and down and down, and there is a doji, and now we're making a new low. So basically around here, we're having a 3-bar play on the daily chart. On the 60-minute chart, we're having a range. Where is our high of the range and where is our low of the range? Let me just remove all those lines from here. This is the low, right? Because there are 2 weeks. Remember what we said in the webinar? If you are having 2 weeks around here, you go for the breakdown at the break of those weeks. You don't go to the short side at the break of the bodies, which is somewhere around here. If it's only 1 week, you could do that. Now that's what we see on the 60-minute chart. And once I mark this, I know that I want to take this thing to the short side below 1310 or for the break of 1310. Now we're looking for an entry around here. What's happening there? That's a huge drop, and I definitely am not going to short it. The stock, which is around $30 after a 70 cents drop. This thing is just going straight down. Because of that, I'm going to wait for a pullback and a continuation. Now it's pulling back. This is the parabolic pullback, giving us the M shape. I personally will not even short it around here. This doesn't look really good for me. I'd give it some time, but looking at the 5-minute chart later, this is a clean reverse MCD pattern, and you could short it here or short it here, and you're forming a range with the middle of the range, the dotted line, and you could short it on a new 5-minute low with suppose the middle of the range. Let's take a look at how you executed this thing. I think it was not this one, it was this one. So look at this. This is what you did. At first, you took it to the short side at the break, right? And this is what we should not exactly have done, because we know that this thing already went straight down. And if stock just goes straight down, it could make a pullback before continuation to the opposite direction. There is increasing volume at the low of the day, which is almost the double, which is climactic. And this is an indicator not of a reversal. It's an indicator at least that a pullback might be happening. Now, this is not bad. I like that you got yourself out. Now, you re-entered to the short side, which was nice. I think the stop loss was really tight, or it got you literally to the penny. But this was not an ideal entry. Why is that? Because this is a parabolic pullback. Remember the ABCD pattern webinar? If the stock forces itself into the pullback like this, you don't short it on the first leg down. Why is that? Because most of the time, it could do this. What are we waiting for? We're waiting for an M shape, something to be like this, or maybe something to look like this with the lower high or the same high. And this is happening exactly here. That's the first entry according to our rules. And this is the better entry, the one we were discussing, which looked good on the 5-minute chart. So that's awesome. Actually, I like it. This was amazing. Another good ad. Look at this. Nice reverse ABCD pattern with an ad. And that was a good run. How much did you get on this one, Nina? This was amazing. I like it. It was really well executed. You tried it once, got stopped out. A little bit rushed, but it's fine. But then you managed to make a good trade outfit with a really good ad on it. Lydia, I don't use flag. I just share this layout when I'm on the webinar. When I'm sharing my screen. It's my layout for the chat room. My normal layout doesn't have it. Not me. Did you get your first partial so big, Nina? Let me share with you more trades. There was a loser, one painful loser, and one decent loser. I just don't remember what stock I traded. XPEF, cool. This was a decent loser. It wasn't that big. So look at XPEF. I was really long biased on this thing. Why am I long biased in it? We were dropping down. We had a moving average cross, which indicates this thing could actually drop. On the previous day, after market, moving average crosses again, which could indicate that this thing could be long. A nice hammer, and then we're curling back up. You could see that the previous resistance is acting as support. Really good engulfing candle, or really good candle on the 60-minute. This one was up here looking at as hammer. On the daily chart will look like a hammer in the pre-market, and I told myself if we manage to break this area around here, we could really run. We could go 52, 54, somewhere around that. Took my entry in the pre-market on a new 5-minute high, but unfortunately this thing didn't work out. I put my stop loss at the low of the range because I entered within the range. Remember the rules? If you're entering within the range, your stop loss is the low of the range. If you're entering at the breakout, stop loss is the middle of the range. So I took it to the long side, get out, and that was my first loser for the day, and it was 1 hour loser. Then I took 3 trades on PAAS. The first one, I took it to the short side, and it's obvious why I took it to the short side. Doji, gap down, and 2 reverse hammer candles on the 60-minute chart. Took it to the short in the pre-market, and I got stopped out at the C level. -1 hour here. So I started my day -2 hours. Now, this thing is dropping down. I'm taking it to the short side. This candle pulls back. It comes back down. I add to my position. I really expected it when it looked like this, like literally flat at the low. I expected it to break and dump down. So I added to my position, and I put my stop loss at the wick of this candle here. When it went up, dropped down, I add to my position, and I move my stop loss to the wick, which was a bad decision. It's not something I do according to my rules, but it's something I felt because I saw that on the level 2, I had only 20 on the bid, and 20 on the bid means only 2,000 shares, which is not that much. Unfortunately, it didn't get them to break down. It just came back up and got me out. With my ad around here, I think I lost 1.5 and not only 1 hour. So now I'm down 3.5 for the day. And I re-enter one more time once I notice the cross. Remember, I told you that stocks usually after the cross, they pull back to the cross. Short, add to my position. Honestly, my average was somewhere around here, and my stop loss wasn't even the high. It was somewhere around there, which was bad again. If I just listened this day, it would have been another red day for me. After that Friday red day, started going in my favor, partials all the way down, small partials, 20%, 20%, 20%, 20%, 50%, because there is a daily level around here, that daily level from there. And because this thing already did a huge move, $2, which is the average true range. Now, I was left with around 3 or 4%. I covered it here. I clicked the cover button so fast twice that it got me filled to the long side a little bit. Then I looked at this and I told myself, okay, I'm having a doji on the 5-minute chart, and I'm already long small position. Why not adding to my long and go on it full size to the long side? So I took it to the long side, stop loss around here, realized that my idea is actually bad because this is not parabolic reversal. It's looking like this. I'm getting closer to the 9, from which it could weak and go back against me. So I exited with half hour loser around here. So you could see 1 trade, 2 trades, losers, 3rd trade, winner, 4th trade, loser, and then this BRCX or BCRX. What was the name of that stock? Let me see. I forgot the name. Yeah, BCRX. And this one was a winner. Overall, I'm up 3 hours for the day, which is good. I mean, I'm not at my goal. My daily goal is 4 hours at least. I strive to get 5 at least on average, but now I'm following the 5 trades rule for the day, and I'm up 3 for the day, which is not bad. My max loss is 4 hours, but again, I don't always hit my max loss. To hit my max loss, I need to have 4 losers in a row. If I have 4 losers in a row, I'm down 4 hours and I'm at max loss. If I have at least 1 winner out of 4 trades, I'll have 2-hour winner. Then even if I lose like 3 or 4 trades in a row, I'll be done with my day minus 2 hours. So it's so rare that I I'm done with the day with minus 4 hours. Yeah, exactly. Let's take a look at your PAS trade, Nina. This is awesome. Look at this. Nina traded PAS as well and traded it way better than me. Only one trade, was really patient with it on a small reverse FCD pattern, which is also 5-minute open range breakdown and partial all the way to the daily level. This was your all out exit, right? Remember to always leave a little bit more because stocks sometimes they make bigger move, even if it's 5%. But you did really well, Nina. That's amazing. Even better than me in this trade, like way better. I assume the stop loss was above the wicks, Nina? Yeah, I personally would have put it right there as well because now you're going for a pattern. What is this pattern? A bullish engulfing sandwich where the bullish candle gets engulfed by bearish candles from both sides. On a bullish engulfing sandwich or a bearish engulfing sandwich, your stop loss is the middle of those. And the closest thing to a middle you have are the wicks right here on the 1-minute chart. So I would have put them somewhere around the wicks. If let's say the middle is around here, let's say the middle is around here, but the wicks are a little bit above the middle. What will I do? I'll put my stop loss above the wicks, a little bit above the middle as well. So do you guys have any questions? Hey, man, I want to make sure my understanding is correct. When a stock break out of a long consolidation range, you will play the second wave of ABCD at the pullback instead of the first wave. Let me actually draw this and correct me if I'm wrong. Let's say that there is a long consolidation area around here, and the stock is breaking down of this consolidation area. Would you play the second pullback instead of the first? Is that what you mean? Oh, okay. So if it's breaking out to the downside and then it's breaking out to the upside, like this. Or the first one was closer. Break out to the long side, then make a pullback, then go up again. Okay, I see that. So like this, right? Basically the reverse photo draw from the first time. Okay, look, it actually depends. Sometimes they'll take in the break immediately, but it depends on how tight the range was. If the range was so tight, like this, one candle up, one candle down, one candle up, one candle down, something like this, it's so tight, I would take the immediate break because it's the first or the second candle. If the range is so big and ugly, like let's say like this, and it goes from the down for the break, like in 3 candles like this, or 2 big candles, or a huge move, a dollar move, for example, on a $12 stock move, I will not get in up here because it could pull back and then come back up. It could pull back even a little bit inside the range. So yeah, in this case, I will wait for the pullback and then I will take it to the long side. Make sense? How often do you get burned when the price moves very quickly in the pre-market trades? I try to check the spread in the pre-market, and I don't really tighten my stop losses so much in the pre-market because I know that the pre-market could have certain spikes. So I don't know. I would say maybe twice a month, once a month. But would you have to look at INO? Yeah, let's take a look at INO. So when I look at this, INO, right? Not INO, yeah. This thing would have been a good long somewhere around here. Why is that? There is a range around here, and this is a tight range. Then you are breaking the range. This could be a good entry around here for the break of the range with the stop loss in the middle of the range. See, in this case, you could have taken it somewhere up there. Would it continue going higher? I'm not really sure, and I personally will not enter anywhere around here. Like an entry around here would have been the best. An entry maximum at the pullback, maximum around here or here would have been decent, but I'm not sure I would take it anymore there because I will not really hope that it's going to go all the way back to view up and above. I'm going to use hard stops. No, Vinny, if I'm sitting in front of my screen and watching the stock, it will be mental stop. I used to use hard stops, and I used hard stops because I could not control myself when I wanted to exit. I would always give it extra few cents, 2, 3, 4, 5 cents, and I'd get burned because of that. Instead of losing 1 hour, it will always be 1.3, 1.2, 1.5 hours. So I decided to use hard stops. Now that I can control my exits and I know when to exit exactly, and sometimes I even exit a little bit earlier, I use mental stops. You're welcome, Karen. So let me quickly take a look if there is anything setting up, and we can call it. If not, we will call it a day. So Geo, this one looks decent, honestly, for to the short side, but the daily, okay, there it is. Okay, but the daily is not so good to the short because the daily, it looks like it's making sort of an ABCD pattern. We had a hammer yesterday. We filled the gap, and now it could reverse out of there. Intraday, it looks weak, but personally, I don't trade these type of stocks to the long side. If the daily looks bullish, but the intraday looks weak, I will wait for like the afternoon to see a setup to the long side somewhere above view up, somewhere above this area around here. If I see that, I will take it to the long. If not, I'll just let it drop back down. Oxy is not that clean. Mara, this is exactly what I was saying. Look at these guys. This is exactly Jivo, and this is how I want Jivo to look later. Look at Mara. There it is. It's dropping down, and then it's giving us this reverse ABCD pattern around here, and this is exactly what we see on Jivo right now. It's dropping, and it's giving us this reverse ABCD pattern around here. But the problem on Jivo is that it gapped up today, and now it filled the gap, and after this, it could come back up. And this is what we see here on Oxy, right? Sorry, where is on Mara? It gapped up, it dropped down, filled the gap, and now it's coming back up. So how would I trade this one? I definitely am not going to take it to the short side because intraday it's showing me that it's weak, but on the daily chart, it's most probably still a strong stock. What am I going to do? I'm going to wait for it to break view up, give me a setup, and take it to the long side, which is somewhere around here. And this is exactly what I want to see on Jivo later. I'm not saying that it is going to do that, but this is what I want to see. Going above view up, give me a setup, and then take it to the long side, and not a setup to the short. Does it make sense? Cool. Vinny, no, I don't use trailing stops. They don't make sense to me. I mean, if you are setting a trailing stop, it means that if it goes up, it goes down, for example, 40 cents, depending on your how you set it, it will get you out, right? Let's say it's going to go parabolically, and then it's going to drop 40 cents. I think it's going to get you out, right? I mean, I'm not using it, but that's my thought on it. And basically, it will not be working as good as I want it to work. I'll just set a range order, because sometimes it will go up, then it will spike down 40 cents, not going all the way down, actually somewhere in the middle, and then come back up. Now, XPEV is good to the short, right? There is a reverse 60 pattern here. The daily is weak overall. The 60 is weak, but it already did the average true range move. DBX 60 minutes. I'm going to take a look at it right now. Let's quickly finish this one, this one, this one. Okay, let's take a look at DBX. Let's take a look. Where is the 60? So the 60 looks really bullish. Look at this. Hammer, 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 and somewhere above 22.93 or 94, it could be a decent long with a stop loss at 22.80, right? The daily is also looking strong, and today we didn't really make huge move, right? Around 90 cents, which not actually even 90 cents. I think this thing could run somewhere later, and I'm definitely not going to trade to the short side. If it's giving a long setup, it will be to the long side. The thing which is annoying is the volume on it. It's so dead, right? How much is that? Like, I don't know, 1,000 shares, 2,000 shares per minute. If Andrew gets 5,000 shares into this thing, he'll just spike the price up for a breakout. It could still pop up. It could definitely pop up. And maybe it will pop up in like 10 or 15 minutes, like looking at what it's setting around here, right? If we are going above this area, it could just simply pop up anytime soon. Yeah, this is actually interesting to keep an eye on and see what it's going to do, because I think if it just manages to close like this in the next 15 minutes, it could run up. But the volume of this thing is so bad on the 1 minute chart. Yeah, I'll keep an eye on it, but I'm definitely not going to trade it because I'm already out of my 5 tickets for today. Tomorrow is the next day, and tomorrow we'll have new 5 trades. Thanks, New Year. Let's take a look at the off-topic chat. I think there might be something there. All right, let me actually check Taz trade. He came a little bit late. Sava. Look at Sava. This is good. What do you have here on the 60-minute chart? A 3-bar play. And definitely looking at this here on the 60, I'll be more long bias rather than short bias. 3-bar play on the 60-minute chart, gap up on the daily chart. I know we could fill the gap down, but I'll take it to the short side if we have a setup to the short side. Here it is to the long side on the 1 minute chart. Nothing so clear around here. Let's take a look at the 5 minute chart. Did you take it to, oh, it was a long actually. That's good. I thought you took it to the short side, and that didn't actually make any sense to me. This is a good long around here, and a good long on an ABCD pattern. Nice partials. One thing which I wouldn't have done, adds on the way up. Always add after pullbacks. Always add after pullbacks. Don't add on the way up, because you just ruin your risk to reward. It's something for the future. You could definitely do that, and you will still have bigger reward rather than just going long one time and then just partial. But you could improve by adding after the pullbacks, and not pullbacks on the 1 minute chart, pullbacks on the 5 minute chart, because it's around 12 o'clock, it's noon, and nobody trades the 1 minute chart at this time of the day. All right, guys, so that will be it for today. Trade safe. No, don't worry about that. It was a good trade. Overall, it was still a good trade, right? The ads were good, but a little bit on the wrong place. So you still did a really good job. And yeah, guys, have a good day. Trade safe if you are still going to trade. If you are done for the day, then you could watch the price action to get more experience. But don't force a trade only because you're watching that, right? Look in the montage, that could help. Yeah, and bye-bye.